Welcome to Davidson's coverage of the 2025 federal budget. We're going to be highlighting some of the changes that are going to be impacting you. As you may have seen in the news, the federal deficit is expected to be about $78 billion this year, although it's going to be going down to $57 billion by 2030. Now, although these are very big numbers, fortunately Canada's cost of borrowing, as expressed by its 10-year yield, remain pretty low, especially compared to our American and British compatriots. However, interest costs are going to be going up to 12% of the budget, up from 10% now. So the budget this year has been split into two segments. There's the operating side of the budget, which is your day-to-day things, your OAS, your healthcare, your education, and then the capital side, which the government is saying is investments that are intended to boost long-term growth. Now, they're intending that the operating side will balance within 3 years. In order to achieve that balanced operating budget, the federal government is planning on laying off about 16,000 federal workers this year, with the goal of right-sizing the workforce to be in line with the pre-COVID workforce. Now, in addition, they're also going to be implementing a cost efficiency review in order to try to find another 15% of savings across the board. But enough about what you could read in the newspaper. What about the tax changes? Under the banner of the productivity superdeduction, the government announced a number of initiatives to help reduce the cost of investing here in Canada. The most impactful of these initiatives is going to be immediate expensing for manufacturing and processing buildings and equipment, clean tech investments, that's going to include EVs, data infrastructure, computers, and patents, and also capital expenditures to do with scientific research and experimental development. They've also announced a number of enhancements to the SR&ED program, including upping the annual expenditure limit to $6 million. That's for the 35% credit, meaning you can get $2.1 million back on that $6 million spend. They've also increased eligibility to allow for eligible Canadian public corporations, which are these smaller public corporations, to claim it. And finally, and this is the best one, they're promised to shorten the processing time down to 90 days using their enhanced AI tool. So hopefully we'll all be able to get our money back sooner. Another booster for CapEx that's returning is the Accelerated Investment Initiative Program, or AIIP, which allows for an increased tax depreciation claim in the first year of purchase for eligible capital expenditures, that is. Now for the mining tax news. They've expanded the list of critical minerals for the purpose of the Critical Minerals Exploration Tax Credit. They've also expanded the Clean Tech Manufacturing and Investment Tax Credit to include investments in the mining, processing, and recycling of those same critical minerals. One thing though is they've also removed from the definition of CEE, or removed from the eligible expenditures for CEE purposes, feasibility and engineering studies. So we gotta watch out for that one. For individuals, the government has confirmed that they will be increasing the lifetime capital gains exemption to $1.25 million for the sale of qualified small business corporation shares. They will also be implementing automatic T1 filing for certain low-income taxpayers to ensure that they can get access to benefits that require the filing of a tax return. On the corporate side, we have a couple of pretty technical changes that were announced with the budget. The first is a closing off of a strategy that would allow for basically the unlimited deferral of the additional tax paid by private corporations on investment income through the use of stacked corporations with offsetting year ends. The second is a change to the transfer pricing program, namely that they were modernizing it. One big part of this, though, is that when CRA asks to see your contemporaneous documents, they're only going to be allowing 30 days now as opposed to 90 days. So for companies with a lot of non-arm's length foreign transactions, it might behoove them to get that contemporaneous documentation now so they don't have to be in a panic in case of an audit. And finally, they've announced they're going to be canceling the federal underuse housing tax, although that will not impact any of the similar filings provincially or municipally. And they're going to be deferring the implementation of the Bear Trust reporting rules until years ending after December 31, 2026. So if you have any questions about the 2025 budget or any other tax matters, reach out. We'd love to hear from you.